All right. Since we know now day two of when we do liquidity, and this is day two, and you know about session high. Well, you know about highs and lows and how price moves bearish and bullish momentum and all that. So we will teach liquidity. We're gonna start off easily like this. Price is moving up, coming back down, moving back up, coming back down, like this. Okay. So what's the example of this? This is bullish momentum, but now liquidity. Hold on. Before I even do that, okay, I'm just gonna tell you. Liquidity is resting orders that haven't been filled. So say there's buy orders, sell orders. In this case, it's buy orders. We have liquidity sitting above this. Price come up. Liquidity above this. Push down for a small retracement or a session, whatever. Made a low. Made swept orders above this. Right. Continuing price higher. Came back down. There's orders, more orders here. There's orders here in both these directions. We didn't grab these orders yet, so we're still bearish momentum. Came back, grabbed these orders. How was fuck off? That was enough for price to make a very bullish push and push higher. You wanna know why? Because we have orders in all these directions of highs and lows. Now this is a bullish momentum. I'll show bearish. Okay, let's connect these. All right. So again, bearish momentum. We have orders resting above here, orders resting below here. So what did price do? Price came down, retraced back in this area, took these orders out, and so now we have orders resting above here. So now there's orders down here. Connect these. There's orders down here. What did price do after grabbing these orders? It came back up, swept this, showed bearish momentum back to the downside, and if eventually came down and just flooded to the face. Now there's also an example of something like this. This is called low resistance liquidity. That was high resistance. This is low resistance liquidity, where we just have like price just inching in the same direction, going down, and then eventually price just shoots up, but also still comes back down in better price action moved. And this is called low resistance liquidity right here. All this buildup of low resistance liquidity, even though right here we swept, we still have low resistance liquidity. We swept this, came back down, swept this, boom, came back down, swept this after still showing bearish momentum. What did price do? Came down, swept this, boom, took all this low resistance liquidity out, all of it from the very start. Then traders had a better direction back to the downside, grabbing this liquidity, and probably most likely, depending on how news and the week goes, it probably would be a shit. Now let's show examples of this on the chart right here, earlier today. Low resistance liquidity sitting right here. Low resistance liquidity sitting right here. Oh, this is actually way back, it's further back. Low resistance liquidity right here and down here. This is actually high resistance. This is a little lower, but this is not 8 o'clock. Yeah, this one. So what did price do on a lower time frame? Low resistance. Price came up, was trading eventually at this. Boom, grabbed the highs, came down, grabbed the low, came down, grabbed the high again. You see other confluences that can help us in our trading. Boom, eventually price is pushed up and filled all this high time frame gaps. Liquidity can also be in gaps, we call fair value gaps, but we learn about that next episode tomorrow or probably 2 days in. But that was low resistance liquidity. Also, it was example right here, low resistance liquidity or double liquidity. Relatively equal lows or like equal highs is a very strong liquidity. So right here we see, boom, you see one session right here, we traded up, came down, swept all this low resistance liquidity, boom, 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 boom. When they come down here, so I actually made a relative equal low. Came back up, swept this high, then boom, big shit candle down to the downside. After we came back up, showed bullish momentum, just started going higher, 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 and eventually we're probably gonna actually not shit down, but I think we're gonna move slightly up and come down. We're gonna follow this bullish momentum for a little bit longer. Let's go back to the past. Boom right here, low resistance liquidity, low resistance liquidity. We're trading, we're really consolidating. Low resistance liquidity, low resistance liquidity. We can even say low resistance liquidity. 1, 2, 3, 4, 5. About 5 sessions, 4 sessions. We just traded it into the same exact area. Price eventually had big news that was very bearish. Took out all of this, even down here. This previous session liquidity, where they come down here. But boom, that was enough. Price just boom to the top side, and now price eventually just held itself together. All right, so what is liquidity? Liquidity is resting buy or sell orders at highs and lows. What's low resistance liquidity? On the lower time frame, low resistance liquidity is or equal highs, or session equal highs or lows, or high resistance liquidity. I think I said that correctly. Oh no. This indicator, by the way, to show you session highs and lows, is Lux Algo Session, and this is my style, how I use it. Oops, my bad. How I use it. I don't even range label. I don't use anything else. This is all it. All right. That is liquidity. Tomorrow I'll probably do breaker structure, then fair value gaps, and keep going in. And I'll probably do a psychology video in between, because psychology is very, very, very big in trading. Like literally, 10% is actually clicking buy or sell, and 90% is just your mind and how you think throughout the day.